Now, moving on, our next presenter is Ms. Jaya Vaidhyanathan, CEO of BCT Digital, a subsidiary of Bahwan Cybertech. Her portfolio of skills includes driving product strategy in the digital transformation space, product innovation, risk management, M&A, technology delivery, and execution. She has worked in the US, the UK, and India extensively and is on many international boards. She combines her deep knowledge of financial markets and disruptive technologies, and she began her career in the US as an investment banker. Prior to joining BCT, she was Executive Vice President of Standard Chartered Bank, heading technology and strategy. Her topic for presentation is reimagining the banking world in the post-COVID era. She'll be joining us virtually from India. Can we please go live with Ms. Jaya?
Good afternoon and welcome to this session of the New Age Banking Summit 2020. We're going to talk a little bit about living through the COVID pandemic and what are some of the measures that we can adopt to try and stay safe during this pandemic. So first things first, what is the impact of COVID-19 on the Oman economy? Wherever possible, I'll try to compare and contrast a little bit around the economies around the world as well. Some of the major concerns that I'm sure most of you have is that the break-even price of crude oil in Oman is much higher than that of its Arabian peers. There's been a prompt of a drop in credit rating of the nation, so there's pressure in terms of financing. Some of the sectors, such as tourism, have suffered an enormous impact due to the pandemic, and the stalling of infrastructure growth. The good news is that it's not a unique phenomena. It's something that most of the other economies have had a more further impact in terms of its overall economy. And the good news is also that the economy, Oman economy, compared to that of the GCC peers, is much more diversified. And you've had 2 full decades of preparation of post-oil economy with focus on a number of sectors. The other positive news is that the telecom revolution has made high-speed data available here throughout the country. And a lot of those work from home, distance education, etc., has continued to progress well. And so new methods in terms of new sectors and business models have emerged. There's also the realization of importance of local production, and Oman is well placed to capture the Arab agri-market, right? So that is something that's been a lot of impact, and it's going to positively affect the Oman economy. And focus on sectors such as tourism and infrastructure is likely to see a weaker recovery rather than a J-based curve recovery. So that's going to have much more positive impetus in terms of the recovery. Like in any of this COVID crisis, right? One of the most important things that people say is to try and stay safe. So what does staying safe mean in terms of the pandemic? So if you ask a healthcare practitioner, he's going to say, wash your hands frequently, wear a mask, use sanitizers, and you can keep the disease at bay. So what in the banking world is the equivalent is that we say, have robust risk management systems in place. And like any hunter does in winter, he hunkers down and sharpens his instruments. And it's the time for the banking world at large to hunker down and focus on risk management if we must make the fastest recovery in terms of all of the sectors out there. So what is that we will be seeing in our BFSI sector, and what are some of the mitigants, or what are some of the masks and washing hands and all those initiatives can we do to recover from this pandemic as early as possible? So let's look at that. So what we can see across the retail and commercial banking sector is that there are going to be 4 main key areas. One is that NPAs are going to surge as both consumers as well as businesses will be unable to make loan payments, and there will be an increased demand for new credit. So which means credit management is going to be key. We will see revenue compression in the short term and in the medium term. And most of our consumers are going to flock towards digital channels for services and sales. And that becomes very important as well. We are going to have misaligned revenues and costs, which also means there's going to be, we have to focus a lot on operational flexibility and rethink our short-term priorities. So what are some of those mitigants that we can do? And how can we focus on all four areas using extensive technology intervention? Let's take a look at that. I'll probably talk a little bit about a case study on the pandemic and how some of the Western and maybe some of our Indian counterparts, what are some of the things they're adopting today to make a fast recovery post-COVID and to also stem the losses during this pandemic. So some of the things that, again, you will see on the counter side is that there were massive supply chain disruptions. And you would see that, you know, there is a mismatch in terms of receivables, payables, account turnover analysis. So while there is gloom and doom all around, what are some of the ways that you can actually put a pen on it and say, you know what, this is exactly the loss that's happening? One of the things that I do is to sit on a lot of the global international boards. And one of the topics that we often ponder about is, you know, what do we put in our annual report? Is that the question going to be, you know, we have X percentage of losses because of COVID? Or is that something that's more tangible? Is that something that we can say with 86.3% certainty, if the pandemic, if we found a vaccine in March, then this is going to be the loss, quantifiable loss. And if it's found to be in June of next year, this is going to be with this percentage probability, this is going to be the loss. And can we model that and bring some certainty into the reporting mechanism? That's something that we are working towards, and we are seeing a lot of increased adoption worldwide on the ability to quantify the loss, the ability to do a scenario analysis on the loss, and to also hold down and say, how do we get prepared to a loss of this magnitude? And how do we kind of put a pulse on what exactly is the bleeding? And how much do we have to pump in to make this work for us? So one of the things most people think about is that it's not really, you know, possible. Could we have done something to forecast this? Answer is absolutely none. So what do? We adopt a strategy of portfolio diversification. We use technology tools. I'm probably going to touch upon, in the interest of time, maybe a couple of interventions that we've used in certain other economies that could well hold good for Oman as well. So one of the first things that we've done is to talk about early warning systems and real-time credit monitoring. So what does it mean? This means that we don't wait post-mortem when our loan payers are not able to, our clients are not able to make those payments, to kind of say that this is a stress, and neither are we in that mode able to predict when the recovery will happen. So what we have adopted very successfully as a really good technology intervention is a system of early warning alerts. So this prevents diversion of funds, this prevents suspicious of fraudulent transaction, and also with those customers which are genuinely suffering from an inability to pay, what could some of the intervening measures be? And this is something that maybe I'll take a couple of minutes to walk you through. That is the fact that let's look at external data differently. Let's kind of look at not just traditional data sources such as your core banking or loan origination, but let's look at some of those intangible parameters in terms of recovery. Do we look at commodity prices when we make a credit decision? Do we look at corporate actions when we look at credit decisions? What are some of the intervening mechanisms that the directors on the companies that we lend to, what are some of the intervening measures they are doing? So it is to look at the credit decisioning more holistically, looking at a lot of external data intervention, and to also bring in a certainty using statistical data to say that this is the percentage accuracy in which a diversion is happening, or it's the percentage accuracy in which a recovery is likely to happen. And so what are the technology interventions? The technology intervention, when you have 300 decision points, it's pretty much impossible for a human being to look at that. So what we talk about is more an AI-led algorithm, artificially intelligence-led algorithm that enables you to capture a lot of those intangibles, which we call gut feel, and use that to make a credit decisioning that's more logical, that's more quantifiable, and that is more replicable in terms of whoever is looking at the portfolio, and to bring statistics and to also bring interventions. What are some of the additional covenants you will be needing? What are some of the models that you will deploy more successfully? So this is one example of a technology intervention. I did talk a little bit about, how do you quantify loss? How do you actually say with a great certainty what exactly is going to be the loss depending on your exposure to different industries? What does that mean? Bank A may have more exposure to, say, the airline industry. Bank B may have more exposure to healthcare industry. So is the performance of Bank A going to be much worse than that of Bank B? The answer is it could be. It depends on what are the other diversifiable factors. So Bank A could have lent also to the pharma industry. Bank B could have lent more to some of the hospitality industry. So how do you kind of use different sectoral exposures, recovery patterns, and actually bring in a science to the quantification of loss is something that we have touched upon quite a bit with ECL. Now, let me explain this in terms of the context. We see that banks are already weighed down quite a bit by the NPLs in this epidemic. And a liberal approach to provisioning could result in underestimating the risks. And a more stricter approach could hamper credit growth. So it's almost like you're playing the scale and you're kind of saying that we have to go with growth, but you'll have to do it cautiously as well. So one of the methods that most of the Western and some of the counterparts, like for instance, in India, are adopting very strictly during the pandemic and more in months to come as we recover, is to use the approach of expected credit loss provisioning approach. And I do firmly believe that ECL brings Oman pretty much on par with other industries or other countries that follow the IFRS 9 or IA standards, because that plays this balance very well. And we often say that do not use something that's ad hoc, do not use something that's homegrown as far as possible, because you have wonderful solutions from fintech providers that provide you automation to this process. They come with inbuilt risk modeling engines. They take into account compliance requirements which work from a central bank regulating reporting needs. And they also work on the pillars of governance, control, ECL models, model validation, and effective model risk management. In the interest of time, these were something that I just wanted to leave some thoughts around, but would love to take your questions through the chat window, and I'm sure the organizers will get back to you with the answers on that. So stay safe, both economically, physically, and take care. And hope next year I do see you in person. Thank you very much.
Thank you, Jaya, for being with us all the way from India.